The Hedgeless Horseman here. It's April the 3rd, 2023. I just wanted to do a somewhat quick video, follow-up video to the last video. And just, to try and kind of hammer home how absurd the risk-reward is right now. And how absurd, in my opinion, the opportunities are in the future supply sector, aka the juniors. It's simply incredible that we're seeing what we're seeing, but at the same time, it's like, okay, recency bias, which is a big thing among humans overall. When was the last time we saw governments and manufacturers, even Pentagon, etc., arm wave about, hey, we really need to get more commodity supply online. The calculations does not add up. We need a bunch of mines. We need a lot more mines in the not too distant future. And they're even handing out grants to mining companies. I'm not 100% sure, but I would guess that might be the first time in history, at least in the modern civilization, where we have seen anything like that on such a broad scale. That it's not just one country. It's all the Western countries, pretty much, at least North American, European Union. And you see China obviously buying up stuff all over the place. That's why even Canada blocked some purchases of some lithium companies by the Chinese. Because it's like, hey, okay, the Chinese, they're buying up stuff in Africa, South America, and even their gold companies are very active, and they're obviously, a lot of their companies are kind of steered by, Xi Jinping. Government is involved, and as we know, China has 10, 30, 100-year plans, etc. They're always planning ahead. They're always looking farther out than we do in the West. They're preparing for, again, the next 10, 30 to 100 years. And they obviously see commodities as one of them, a very important thing to secure, because otherwise you can't really have a flourishing economy, obviously, if you don't have the raw materials to build stuff, manufacture stuff, build houses, yada yada, create weapons, submarines, all of that, all of those kind of things. So it's just, I just find it unbelievable that the commodities in the ground are still trading like we have some kind of supply glut coming up, or that it's easy to find deposits, or it's easy to, if you even find a deposit, to put it into production. That's basically what I would say the junior sectors especially is pricing in. Again, the proxy, I would say maybe not all nickel companies and copper companies, etc., juniors are trading down here, but many are. I would say it's like, Pacific Ridge, for example, which is gold copper focused in BC. I think it had a more enterprise value recently of like 14-15 million. That's certainly not pricing in a big chance of success of finding a copper deposit that works at today's prices, let alone in a future where, hey, we're running out of copper, as I've shown that in a previous slide in the previous video, where some estimate that copper, the visible inventories, will run out by August this year, which would by default lead to higher prices, all else equal. So they're not pricing in anything of that kind of stuff. You you have governments, and including Pentagon, literally giving money, giving away money. And as we know, I mean, there's a lot of mouths to feed by the governments of the world. So when they're throwing money at something, then you know it's kind of a big deal. I mean, they're trying to save themselves, obviously. And Pentagon are obviously strategic thinkers, also thinking about, geopolitical power, yada yada yada. So if they're involved as well, the Defense Department is throwing money at mining companies that are not necessarily even in the US, but in Canada as well. I mean, what does that say about the importance of these commodities, and how it's not a problem that's like, yeah, in 20-30 years we might have a problem. I mean, governments don't really work like that. As we know, typically politicians, etc., they don't get really paid, or they don't get elected by preventing problems. They don't do anything until it's kind of too late, and they fix a problem. I mean, that's typically what happens. You see, it's like the infrastructure, whatever. It's like a bridge that has been way past its intended life, for example, and then it's like when that breaks down and people get killed, that's when they actually do something. I mean, that's typically how politicians work. So if they are doing this, throwing money right now at something, then you kind of know that it's super important from a strategic standpoint, and they're blocking Chinese buyers, etc. Because obviously, if the more self-sufficient China is, if they have all the raw materials they'll ever need, and we go into in a few years or whatever, or several years, and US, Canada, and the West does not have the commodities needed to grow. I mean, obviously that will be a big boon to China, that they actually can grow because they have all the materials needed to grow and do the EV route, etc., etc. So they would obviously have a lot of power in that case. It's like, imagine you have two world powers, East versus West. The East has all the commodities it needs, prices aren't sky high, and in the West you're like let's say you have like 70% of the copper you actually need, etc., etc. So prices go sky high, and you don't even have all the copper you need to actually build out the infrastructure, etc., or have a functioning modern society. Of course the East would have a very big advantage in that case. And I mean, I'm just thinking from the perspective, let's say, this East versus West thing ramps up, and all of a sudden it's like, yeah, everybody that's in the East, like the BRICS bloc, they're like, hey, you're not allowed to export to the Western countries, NATO countries, for example, because, the economic war has escalated. What would happen then? I mean, Europe doesn't have any. I don't know if Europe has one single lithium mine right now up and running. Sweden hasn't really, for example, which is famous for being a very metal endowed area, and it's one of few countries in Europe where there's actually free space. I mean, you can't really build many mines in the Netherlands, for example, because there's people everywhere, and the same goes for like most places in Germany and France, etc., etc. And nobody wants to have a mine there, nice French countryside, to put up a big mine there. There's going to be a lot of opposition. So Europe is, beyond effed if something were to happen where like, yeah, they can't even import all the materials they need, and that's a lot of materials. If there's even a chance of that, the countries that produce metals that are tied to the BRICS countries or the East, that they basically you can't sell to the west, because there's all of a sudden, the war is intensifying. So I mean, obviously the commodity prices in the east would go lower, because they would have maybe a surplus of commodities, so they could build, cheap cars, cheap whatever, build houses. And the west would be like, yeah, okay, or the few copper, nickel, lithium mines, whatever, that we can get supply from. I mean, that's way too low in terms of supply, so prices skyrocket. And that's going to be, I don't know, highly inflationary, everything's going to grind to a halt, etc. I mean, that's basically why they're scrambling and saying, no, China, you can't buy these lithium mines in Canada, because in that case, if you buy them, you can ship the material, the lithium, to China, because okay, if you're a Chinese company, you can do whatever you want. I mean, it's up to the company to decide where who you want to be, who your customer is going to be. So they're front running that basically by, no, you can't say you can ship this to China, so you aren't even allowed to buy it. I mean, again, it's like there's neon signs here that's like critical metals, minerals. They're considered critical for a reason, and you have to, in my opinion, pay very much attention when you see actually governments who are not really, again, they're not really incentivized to front run problems, because if nobody can see you fix a problem, you're not going to get credit for it. You're not going to get credit for nothing bad happening. You're going to get blamed if something bad actually happens. I mean, typically, or you get credit for fixing it when it happens, and then you of course blame that it's because of the other party or the previous administration, whatever. So it's like, to see them be so aggressive to throw money when it's not like the US doesn't have a big deficit already. You should really pay attention. And like some of these charts, I mean, this is the COMEX goal. I think it's vault totals, cumulative change since February 21, minus 18.1 million ounces. Obviously, this is a downtrend. Gold is leaving the vaults. More demand than supply. More gold gets taken out of the COMEX than actually enters it. Okay. LME nickel warehouse levels. I mean, it started up at what? 320,000 tons. It's now down at 42,000 tons. I mean, think about the percentage drop here. So it dropped like 280,000 tons. 280,000 tons in 5 years. And there's like 42,000 left. I mean, that's just incredible. I mean, 40,000. So this dip here to here, which was, I don't know, a few months. Just this dip from here to here would mean that this goes to zero. Again, it's not a long time. It's not like 10 years from now or 20 years from now. This drop here would, if this trend happened now, this would go to zero. It's just absolutely ridiculous how obvious it is that at this rate, this growth rate, steady state, prices have to go up because there's not equilibrium. Supply is leaving faster than getting in. And copper, I mean, this is one of the most obvious trends. Sure, there's you have rebuilding of inventory, then it gets withdrawn from there, but like the trend is obviously down, and anytime so far it's hit this level, I mean, it's basically been able to, they've been able to scramble up supply, but it's like, yeah, the highs are getting lower and lower and lower. And the kind of same goes for the lows, actually. This is obviously lower than any time here. And again, that if we're here, right about here now, and like that article said, that projections, some estimations say that, they're going to run out of global, I think, visible copper inventory by August of this year. I mean, that's 4 months. It's not 40 years. It's not even 4 years. And here you have silver, 120 million ounces just since February 21. I mean, it's just crazy. It's broad-based. It's everywhere. It's going on in pretty much every commodity, especially the critical ones. And then, of course, like I also showed, you have the gold production. That's also going down. Typically, grades are going down, which typically means lower production. And then you have global mining underinvestment in growth. It's like, to fix this, how do you fix this supply-demand imbalance? Okay, you obviously need to put more mines into production. You need to discover more mines. So this is the actual investments. That has gone down as well. I mean, last 10 years, down a lot. That's not helping this. And of course, as we know, how hard is it to actually get a mine up and running? I mean, it's just insane what's going on right now. And it's like, when you think about, okay, how do you fix this? I mean, you saw the OPEC news today. It's like, yeah, okay, oil prices are too low, so we're just gonna shut off, wells and reduce production by 1 million barrels. So like, yeah, okay, we have too much oil. And obviously it's a lot easier to adjust the production of oil than it is to adjust I mean, there's no copper mines they can turn on tomorrow. If prices are too high, yeah, we'll switch on these copper mines. That takes years. So again, I mean, we're talking, in case of copper, it's like maybe a mere 4 months, and this would be like empty. It's just crazy, and still you have, I mean, S&P commodity index versus S&P 500. What does S&P 500 need? That's obviously 500 of the largest companies, something like that. What do literally all companies need? Raw materials. So the very thing that S&P needs is going into, critical shortages. And it doesn't look like that's going to be fixed anytime soon, and it's just going to get worse and worse potentially, unless we have an absolute crush in demand. But still, the lifeblood of everything, and the lifeblood of all the countries and companies, etc., they're trading at kind of generational cheap levels. I mean, this is a commodity index, obviously, but if I'm looking at the silver gold space, and I would say that the same goes for most, or a lot of copper, nickel, maybe not lithium juniors in the same sense, but they have a very different supply-demand picture. But it's just crazy, given what we're seeing out there. I mean, how imbalanced the supply-demand is. If this trend continues, that inevitably leads to higher prices. And since this problem is again not getting fixed anytime soon, meaning that this trend is likely to, go on. There's no fixing this. There's no quick fix to this. And when we're gonna need more and more in the future, because I think copper demand, for example, typically grows at 3% per year. We're going the opposite way in terms of supply growth. We're going down while demand is still going up and has gone up for I don't know how long. But supply is going down. It's going to go down even faster, perhaps, because this underinvest. I mean, right now we might be, live on some of the investments done back here, but this is going to lead to even worse supply pictures going forward. It is just absolutely frigging crazy that it's the retail that are setting the prices in these juniors, obviously, because the governments and Pentagon, they're not investing in the stock market. They're not buying shares in the open market. The major miners are not buying shares in the open markets. The Toyotas, Mitsubishis, Ford and GMs of the world, they're not buying shares of and ownership of these commodities in the open market. It's retail and retail only, because liquidity, if you've seen the TSX trading volumes, I think Crescat put up a chart, it's near 10-year lows or something like that. So none of the big players can even invest in the open market, let's say. And of course, since juniors are the future supply, they have these metals in the ground. As the importance or let's say lack of supply, the supply-demand imbalance is going in a favorable direction. Obviously, they should be pricing in that. The market is supposed to price in all future scenarios today. What is the retail-driven market pricing in? I would say it's pricing in a supply glut. I would say it's pricing in the exact opposite of what is actually happening. So it's basically governments, Pentagon, supply-demand picture, capex spending, major miners and OEMs are saying one thing: that the value of commodities and commodities in the ground, future supply, is going up and up and up over the last 5 years. And by the looks of it, will keep going up and maybe even more so in the next 5 to 10 years. But the juniors are pricing in the exact opposite. So it's basically the retail investors. I mean, one big thing I think is that they're not even in this sector anymore. The ones who are setting prices or could actually make the market reflect the reality of today's supply-demand environment, they're not here. This must be the biggest dislocation ever between price and value. And of course, value is supposed to reflect the future. And I would say, again, it's not only gold and silver. Because, I mean, critical metals, minerals, that's where these guys are out there beating the drums, big neon signs saying these commodities are getting more and more valuable. More and more valuable. And will get more and more valuable. And you've seen the, the article saying that, hey, we need like 74 new nickel mines by 2030 or something like that. And we need to find and put into production one Escondida per year or something, or maybe more than that over the next 10 years, which is the largest copper mine in the world. Still, these juniors are pricing in. Even the best juniors are pricing in a low chance that they have a project or a deposit that's ever going to become a profitable mine. So if the retail sector is correct, that means we're gonna have it means that all of these entities are wrong. We're gonna have a big supply glut or a big demand crash, which does not jive at all with these graphs here. It doesn't jive with reality at all. So I would say retail in the resource sector, the retail investor, again, they're mostly out of it, and that's why there's no, efficient price setting. There's no buyers. There's no new capital getting in. But I would say, if I had to guess, I would say this is probably the biggest layup there's ever been in junior miners in at least, 40 years. It is absolutely mind-numbing. The prices set by retail investors right now is betting against what is going on and what all of these companies and China are seeing is going to happen in the future. China trying to secure supply as fast as they can, even getting a no from the government of Canada, for example, because they also realized the strategic importance of securing the critical minerals and metals you actually need to have a functioning society. And it's the retail set market that is betting against all of that, betting against the current trend, betting against what this is going to lead to in the future. Betting against what all of these people are saying. It is just absolutely incredible. It's it's kind of boring. This has to be the biggest no-brainer we'll perhaps ever see. Because there's a big difference between, copper itself. If you own copper, yes, the supply demand looks great, and you're probably going to be up if you own a ton of copper, literally. But it's specifically, I would say, the junior sector, the small companies, the ones that have to, some of these juniors simply have to have projects that will become mines, or this is going to get a lot worse. So it doesn't add up at all. Because if they're pricing in like 1 in every 10 or 20 of the good projects will be a mine, imagine how bad the supply picture will be in the future. It's not like if we need an Escondida per year. How many junior projects is that? Decent sized copper deposits. How many of those fits in one Escondida? A lot. And the retail sector, the junior sector is pricing in like almost nobody has any deposit that is gonna, become a mine. So the retail driven market is pricing in a supply glut, crashing prices, whatever, a very bleak future for their projects and the commodities and the supply demand picture, while everything is pointing the other way. And let's say smart money, who plans for the next 5, 10, 20 years, they're seeing the complete opposite. It is just absolutely mind-numbing how big of a layup this is. Whenever in history have you had all things point to higher prices and the value of commodities in the ground going up, while the way to play it would be, again, buying commodities in the ground, and it's still trading like it's never been more useless. Trading like, there's not going to be a problem at all with supply, or demand is going to absolutely crash. So let's say that happens. What's going to happen with gold and silver in that case? And it's like that meme. If you buy the threat of the nuclear war, and that's, from a game theory perspective, that makes total sense. Because if you invest in all these critical minerals and gold and silver, and you're wrong that all of them will be kind of worthless. Then we probably won't have a society anymore, not as we know it. And then it doesn't matter anyway. Because if that happens, that means that your S&P 500 shares or whatever, they're also going to be worthless. Because we won't have we won't have a functioning society. Because there's no demand for copper, nickel, gold, silver, whatever. Everything that makes our the data and electricity driven world or societies work as they are working right now. It's just absolutely mind-blowing. Absolutely mind-blowing. I don't care what any short says or anything like that. These shorts and the context of what is happening is so much larger than trying to get any short-term dip or correction or top correct. As I see it, the bull market in a lot of commodities are like written in stone by now. And that should be reflected in the prices of the future supply in the ground. They should probably be up here or something. Because they should, be front running what happens when this trend has a big effect. What could happen if this trend continues? How close we are to these walls actually getting empty? They should be front running all of that. They are absolutely not pricing in any kind of scenario where these guys are correct. Junior sector is pricing in that this will go like this, and this will start going like this, and this will go like this. That they'll kind of become worthless. So the question is, how likely is that to happen? Are we just going to find and put into production a new Escondida tomorrow, or 74 nickel mines within, 7 years? How is that going to happen? We're not finding enough. We're not doing enough in terms of capex, productions declining. It's absolutely ridiculous. I would think that even if you have again broad-based shotgun approach, you don't need to be right on every metal. But since a lot of them are so underpriced, the companies that own the metals, that hey, if just nickel just takes off again, and nothing, let's say bad, something really bad has happened with Magna Mining, for example, I could see that go up 5 to 10x. That could potentially, make up the whole current portfolio in that case. That's one stock. If copper does well, my copper juniors, I think, could go up, who knows, 5 to 10x over the next, 3 to 5 years. Maybe they will make up the entire portfolio if everything else went to zero. If gold and silver breaks out, that's probably going to multi-bag the portfolio. So it's like the retail have to pretty much be right on every single commodity right now. And they're betting against all these obvious trends right now. And all the smart money and even, military strategists. I just don't see retail for the first time in history being so abnormally smarter than everyone else that knows a lot more and has a longer time frame and can see actually what is happening. So both can't be right. Both can't be right. Either the retail is the retail-driven sector, or the market prices set by retail is correct, and we won't really make much money over the next few years. Or these guys are right, and the opportunity right now is absolutely mind-numbing because it's not pricing in, again, it's not pricing in that these guys are gonna be right. And typically how correct is the retail market? How right was it here? Well, at face value, it ended up being 1,851% wrong within 3 years. And up here, it was 96% wrong within 4 years. Every time this sector has been this cheap, it didn't take too long for it to look absurdly stupid in hindsight. Boom, boom. This wasn't even this low. Boom. I'm expecting boom. It's just absolutely crazy. This is so boring, it's not even funny. Oh. I mean, again, the risk reward is absolutely retarded. If we're starting off buying something cheap that's pricing in a really poor future, if that future ends up happening, we still paid a fair price today. But if it's wrong and these guys are right, some of these juniors are gonna go up so much you won't even believe it. That's great risk reward. Because if we pay for a extremely bleak supply demand picture, which again is not at all jiving with what is actually happening and has been happening over the 5 years. It's not jiving with this trend at all. So, I mean, how can you beat bets like that? You're buying something for a price that is reflecting a reality that is much worse than what we're seeing. What is the big change in that case? So if it's pricing in a very sucky future in all metals, in the junior space is pricing in a sucky future for all metals, all projects, etc. Worst thing can happen is that, yeah, it continues to be sucky, kind of. Which doesn't really, I mean, again, if you play that forward long enough, if there's no mines coming into production, everything is just going to be even worse. So the few mines that actually get into production would be worth a lot, obviously. Because if you have 30% of the supply you actually need to be put into production, prices are going to go up a lot, and those ones that are in production are going to have a very high margins. They're going to get paid a lot for the stuff they produce because so few new producers actually come online. So it doesn't add up, because that can't continue forever either, unless civilization is going away. So it's just the most asymmetrical bet I've ever seen, and at the same time, it's not like it's one sector specifically. It's not only copper. It's like, yeah, critical metals, minerals, plural. And you have gold and silver selling for, scrap prices, basically. I have never been so bored ever in the junior mining space. I mean, it is not even exciting. It's exciting when there's a chance you're making a big mistake or something. It's exciting when you're all in on one stock, for example. You're sitting there biting your nails like, oh, how is this going to play out? I don't know what the future is going to hold. I don't know if, this is going to turn out well or whatever. But if you can spread bet across, multiple absolute no-brainer layups, what are the chances of success that's going to end badly? When it's already pricing in that it's pretty much for sure it's gonna end badly. It's just absolutely ridiculous. I tweeted a day ago or so. It's like they will have to nationalize everything. Otherwise, I don't see how all copper juniors, all nickel juniors, all gold juniors, all silver juniors, all lithium juniors, all rare earth juniors, that every single one of those are going to be worthless. When all of these are saying they're getting increasingly valuable, which lines up with what we're actually seeing right now. It's just absolutely crazy. It's absolutely crazy. This is like written in stone. It's like I retail sector must have the. I mean, why do people lose in this sector? I mean, there's people setting these prices we're seeing today. We shouldn't have an opportunity like this. The retail sector should be efficient enough that it's actually pricing in reality and the future, and the prices should be up here already. So I mean, then you have to think about how dumb is the sector really? This is the marginal buyer-seller who's setting prices this low across every critical mineral pretty much, and gold and silver. It's just absolutely breathtaking. We should not be able to see opportunities like this. The market is supposed to be efficient. We shouldn't have asymmetrical bets to this extreme. Shouldn't really be available to any investor. And like we've seen, I mean, again, if you have a firm grasp of the obvious, have infinite patience, and you know that it's a matter of when, not if, prices are gonna correct in one way, you're gonna make a lot of money. That's just it. That's comes with the territory of a cyclical sector, etc. And I have never seen. I mean, I've not been in this sector for like 40 years, but since I started, I have never seen a more asymmetrical risk reward. Down here, critical minerals and elements weren't really a talking point. You didn't see governments, you didn't see Pentagon, you didn't see major miners do a lot of mergers, acquisitions. What has happened? 7 years have passed, and the supply-demand picture has gotten worse. And this retail-driven sector is not pricing that in at all. It's not even pricing in the current price of many of these metals. Back here, gold was at 1100, silver was at like 14. Almost no gold miner on earth made any money. So at face value, this was a worthless sector. So the bet was then that these low prices, this sector can't be shitty forever because every mine is going to shut down and there's not going to be any new supply. But demand is going to continue, so prices have to go up. Yeah, prices went up. It was inevitable. And people who bet on that, even though, yes, at the time, you bet on things changing. It changed, you made a ton of money. Now, the sector isn't even worthless. The gold sector surely isn't worthless. A lot of the big major miners are making money. A good mine is making a lot of money right now. That is not reflected at all in the juniors. Even the better prodigies are trading like, yeah, they might have a mine. And surely not that the gold prices are going to go higher. So again, this is the most I never thought I would see a sector this clueless. It is not even funny anymore. It is not even exciting anymore. It is the most, biggest layup we'll probably ever see in our lifetimes. And that doesn't mean that every single junior will be a big success. uh, it means that the ones who are successes, you're gonna be abnormally paid for them, I think. And if you can even diversify that there's not only one no-brainer but a lot of no-brainers and in different commodities, so you basically have a basket of no-brainers that don't even correlate too much. I mean, yeah, how are you gonna lose? Let's say you buy the best juniors in 5 different commodities. You buy you buy the best juniors with like third party vote of confidence, where there's a major involved, or there's Landins involved, or Pierre Lassonde involved, or McEwen involved, or a mid tier at least involved, and high insider ownership, etc., etc. That means that pretty much every project has to become shit, or there will be a price crash in all of those commodities, and that will stay like that forever. Yeah, no, it's just it's not too fun. It's not too fun anymore. There's no. It's not even exciting. It's not even exciting. It is it's it might sound weird to say that or to hear that, but it's like it's not even exciting. Back here it was exciting. It's like at face value we're buying something that was actually worthless at the time. Now you can buy them like they are worthless at the time, even though they're not. And it looks like they're becoming increasingly not worthless by every passing year. Yeah, just incredible, incredibly boring. Yeah, this is probably the biggest when and not if opportunity we'll ever see in our lifetimes. And it's not even gotten super worse yet. I mean, the deficits in a lot of these commodities are expected to get worse, and they're already down here. It is absolutely crazy what's going on, and we can literally steal. If you're a stock picker, or if you're a retail investor, you can just go into the market and steal all these high quality juniors at fire sale prices. It is just unbelievable. I don't think. I mean, that should be all the copium you need. It's like the retail sector, which is infamous for being super wrong at every major turning point. It looks more wrong than ever. I think you have. I don't know what you're looking at if you're bearish on juniors right now. You're probably looking at some short-term short of something or whatever. Technical standpoint, it looks like it's might get into resistance here, so I'm gonna wait for the perfect buy, whatever, like everybody who loses money says. Again, just a big rant, but it's just absolutely incredible. I don't see how we lose. And obviously you would want some physical gold and silver. I mean, that's the safest thing there is. This is for wealth creation. It's not for capital preservation. Well, not at face value at least. But then you have people like Ross Beatty and Friedland, who basically, I mean, they got everything they have pretty much in. Well, of course they would be rich because they have real estate and stuff like that. But it's like, I bet that most of their investments that's actually in the companies themselves, because I think they see them as more undervalued than the actual commodities, and that's what I'm seeing in the retail space. How undervalued gold is, hard to say, but the gold juniors for sure are undervalued, the higher quality ones, and that's where I see the bet being the most asymmetrical, even though I own and want some physical gold and silver for wealth preservation. But from wealth creation, risk reward, stuff like that. I don't think you can beat the junior space. It's just absolutely incredible. It is mind-numbing, mind-boggling. But again, these are just my 2 cents. Consider me biased. Don't see this as investing advice. You have to form your own opinions, do your own due diligence. If I talked about any juniors, consider me biased. I might own them. They might be sponsors. Assume they are both of those things, and do your own due diligence. I can't guarantee anything. I like I've said a bunch of times. I don't. It's not about certainties. It's about risk reward and probabilities. And I see the risk reward way too good than it should be even allowed to be. And the reward side is so large at this point in time, and the probabilities over rewards are probably higher than ever. And it's of course outsized as well, because if prices were here and you would be pretty sure that commodity prices, etc., would head higher, maybe up to, I don't know, here. Yeah, that would be a pretty big, good bet. But if they're starting off down here, obviously the reward side is just bigger. And you also need metals to go up, not as much. If you start here, they might, I don't know where gold would need to go for you to have a, 5 bag or whatever. But if junior started up here, maybe gold would need to go to, 3,000 for a 5 to 10 bagger. But if they're starting down here, maybe $2,500 gold would be enough for us to have, 5 and 10 baggers, etc. in some of these juniors, which obviously skews the risk reward. And again, what's the worst case? If they're trading like what they have is worthless and gold is at 1,500 or below, even if gold goes down to $1,500, you paid a fair price today. But you're not paying for gold being where it is, which is 2,000, and you're not paying for any upside to that. So yeah, you will never see hands like this in poker. This is just absurd. Thanks for listening. Bye.